EPK Capital presents Daily Brief for 29th October 2025. Hello, and welcome to EPK Capital's Daily Market Briefing. I am your AI host, Rutvik, bringing you the most critical financial news and analysis from the last 24 hours. It was a landmark session on Wall Street. Yesterday, October 28th, investors witnessed a powerful risk-on rally that pushed all three major U.S. indices to new all-time record highs. This surge wasn't isolated. It was fueled by a potent combination of factors. First, overwhelming anticipation of an interest rate cut from the U.S. Federal Reserve, which concludes its meeting today. Second, a significant political development, a potential thaw in U.S. China trade tensions. And third, a spectacular earnings-driven surge in the technology and logistics sectors. Today we are breaking down all the critical data, the macroeconomic drivers, the key political comments, and the major crypto news you need to be aware of. Let's get straight to the numbers. The closing bell, global index levels. Starting with the United States, it was a sea of green, culminating in record closes across the board. The S&P 500 surged 1.2%, closing at 6,875.16. This is a significant milestone, marking its first ever close above the 6,800 level. The Dow Jones Industrial Average climbed 0.7%, or 337 points, to end the day at 47,544.59. And the NASDAQ Composite was the clear outperformer, rocketing 1.9%, or 432 points, to finish at 23,637.46, driven by a massive rally in semiconductor and megacap tech stocks. The optimism was global. In Europe, markets also closed higher, though with more modest gains. The UK's FTSE 100 had a strong session, hitting a new intraday record of 9,715.22, before settling with a slight gain to close at 9,653.82. Germany's DAX rose 0.28% to 24,308.78, and France's CAC 40 finished up 0.16% at 8,239.18. As we moved into the Asian session this morning, the baton pass was a bit shaky, with markets trading mixed. Japan's Nikkei 225 slipped about 0.18% to 50,419.96, as investors took some profit off the table after Monday's strong rally. Australia's S&P/ASX 200 also dipped 0.41%. Macro driver 1, all eyes on the Federal Reserve. So, what is fueling this incredible rally? The number one driver is the U.S. Federal Reserve. The Federal Open Market Committee, or FOMC, began its two-day meeting yesterday and is set to announce its interest rate decision later today, October 29th. The market has almost fully baked in a 25 basis point rate cut. According to the CME FedWatch tool, traders are pricing in a 97.8% probability of this cut happening. What's more, the market sees a 92.8% chance of another cut in December. This is a powerful stimulant for stocks. The narrative is that the Fed is leaning forward, willing to cut rates to support a slowing labor market, despite inflation remaining sticky at around 3%. Recent weak non-farm payroll reports from July and August seem to be giving the Fed cover to ease policy, and investors are celebrating the prospect of cheaper money. Macro driver 2, a major U.S. China trade development. The other major catalyst is political. Yesterday, investors received the most significant positive news on the U.S. China trade front in months. President Donald Trump announced that he expects to finalize a trade deal with Chinese Premier Xi Jinping when they meet today, October 29th, in South Korea. Here is the specific detail that moved the markets. President Trump stated the U.S. would be willing to cut in half the existing 20% tariffs related to fentanyl if Beijing takes decisive action to crack down on the export of chemicals used to make the drug. This is a massive de-escalation. You may recall that this month, trade tensions flared up significantly. China issued restrictions on rare earth mineral exports, and the U.S. retaliated by threatening a new 100% tariff on Chinese goods, set to begin November 1st. This new fentanyl-for-tariffs proposal provides a clear off-ramp to that trade war, and the market is breathing a collective sigh of relief. The bond and commodities market reaction. This dual driver of Fed hopes and trade optimism had a clear effect on other markets. In the bond market, the U.S. 10-year Treasury yield, which moves opposite to its price, eased to around 3.98%. This signals that bond traders are also taking the Fed's potential rate cut seriously. Yields had been as high as 4.17% earlier in the month during the peak of the trade tensions, so this is a significant move downward. Crude oil prices were relatively flat, with WTI crude hovering around $61.26 per barrel. Oil is being pulled in two directions. The U.S. China trade optimism is good for future demand, pushing prices up. But reports that OPEC Plus may decide to increase production in December are bad for prices, pulling them down. The result is a stalemate. Gold, the traditional safe haven asset, pulled back after an extraordinary run that saw it breach $4,000 an ounce and hit an all-time high of $4,381.58. Gold has now dipped below $3,900. This is a classic risk-on move. With trade tensions easing, investors are selling their insurance, gold, and buying growth stocks. On the ground, the stocks making headlines. Now let's look at the individual companies that made yesterday's session so historic. First, the $4 trillion club. In a stunning display of market power, Apple briefly touched a $4 trillion market capitalization for the first time. It was joined by Microsoft, which also surpassed the $4 trillion mark, with its stock jumping 4% after announcing a new e-commerce and AI partnership with OpenAI. Both of these giants report earnings later this week. Speaking of earnings, we had a slate of blockbuster reports. PayPal, PYPL, stock soared 15%. The company beat earnings estimates, raised its future guidance, and like Microsoft, announced its own e-commerce partnership with OpenAI. UPS surged 12%. The logistics giant crushed earnings and raised its fourth quarter revenue forecast. It also highlighted the success of its turnaround plan, which includes saving $2.2 billion through the reduction of 34,000 jobs. United Health Group, UNH, rose 3.9% after it not only beat earnings, but crucially reported that its medical costs were lower than analysts had feared. It was also a massive day for AI and M&A. Qualcomm, QCOM, jumped 11.1%. The chipmaker unveiled a new AI chip designed for data centers, signaling a major strategic push to diversify beyond smartphones and compete directly with NVIDIA. And in a major merger, two key Apple suppliers, Skyworks Solutions and Qorvo, agreed to combine. Skyworks stock leaped 13%, while Qorvo gained 11%. But it wasn't all good news. Homebuilder D.R. Horton DHI slumped 6%. It missed on earnings and warned of ongoing affordability constraints continuing to hurt the housing market. And Amazon confirmed plans to lay off 14,000 corporate workers. The stock, however, rose 0.75%, as investors often view such cost-cutting as a positive for the bottom line. Crypto and digital assets. Finally, let's turn to the world of crypto. The biggest story from October 28th was a major regulatory and product milestone. The very first spot Solana, SOL, exchange-traded products, or ETPs, began trading in the United States after receiving approval from the SEC. This follows the path of Bitcoin and Ethereum ETPs and represents another step in the mainstreaming of digital assets. This news comes as the broader crypto market is still recovering from a recent flash crash on October 10th. That crash, which saw over $7 billion in liquidations in a single hour, was largely attributed to the previous fears of Trump's 100% tariff announcement. Yesterday's positive trade news has helped stabilize the market, with Bitcoin and Ethereum posting modest gains, but that earlier volatility is a stark reminder of how sensitive the crypto market remains to global macro events. Summary and look ahead.
So, to summarize the last 24 hours, we are at all-time highs in the U.S., driven by powerful optimism on two fronts. The Fed, an expected rate cut later today. Politics, a new constructive path forward for a U.S. China trade deal.
This optimism has pushed investors out of safe havens like gold and into growth assets, with AI-related tech stocks and strong corporate earnings leading the charge. Today, October 29th, will be all about the follow-through. We will be watching for two key events: the official FOMC interest rate decision and press conference, and the outcome of the Trump-Xi meeting in South Korea. The market has priced in perfection. Now, we'll see if a sell the news event unfolds or if the rally has more room to run. That is all for this market briefing. I will be back tomorrow to analyze the fallout. Thank you for watching. Just a quick reminder that this video is for educational purpose only and should not be taken as financial advice.